screen, charts and candles, the digital sheen, open in range, his weapon so keen. He's the structured trader, a market machine. Bank moves, he mimics, he plays their game. New mirror fashion, glory is his claim to fame. Market structure king, watch him do his thing. Pips and points, the profits sing. Trading like the banks, he's in control. Leads the master filling his bankroll. Leads the master filling his bankroll. His mind's a map of supply and demand, turning charts to gold with a steady hand. Forex flows like rivers in his plan. Bases bow to the market man. Break out at the open, the strategy's tight. Position for the swing, he wins the fight. Risk is measured, the balance precise. Leads on the rise, he rolls the market structure king, watch him do his thing. Pips and points, the profits sing. Trading like the banks, he's in control. Leads the master filling his bankroll. Lead the master filling his bankroll.
Oh, yeah. Yeah, yeah. Leads on the charts. Yeah, watching the flow, candles rise up, then they drop down low. Pips in his pocket, he's stacking it tall. Market structure trader, he's got it all. Open in range, it's the key to the game. Breakout moves, profits calling his name. Name, 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 name. Market structure leads the king. Trading waves, let the profits sing. Mean reversion, he's locked and loaded. Like the banks, his strategy's coded. Coded, coded, coded.
Morning, how are we all doing? Morning, everybody. Morning, Baggy, Ladder, Road. How we doing? Just quickly on the DAX. I've just stuck a pending order short on the DAX this morning. Fairly wide stop on it. Just in case we get another collapse like yesterday. Obviously, yesterday we had this ridiculous move at the open. It's just basically dropped an ADR at the open. Markets, everything's correcting, really correcting at the minute. So just in case we get another parabolic move, I just stuck a pending short in because obviously what's going on at the moment is the markets are just selling off at a rate of knots. So just a speculative order to catch any big parabolic downward moves. Doesn't look like we're getting one today at the moment. So, but it's there just in case. We're right at the previous close from yesterday's DAX, and we're just at the previous session low. So if that previous session low gets taken out, can't actually see it on this chart, but you've got that is your most recent low. You probably can't see it's behind my head, but that is my sort of most recent low, that previous high here. So there's a massive flush distance. That's, just stuck a TP in somewhere basically, but that's where I'd be looking at getting out if it collapsed, but it doesn't look like it is this morning. So just wanted to get that set up before the open, just in case. So we are actually pushing up at the open right now. So ORB, we will see where we go. We had a small gap down from, that's not the close. The close was down here, but this post-market movement. So upsides today, we've got to watch this low here, somewhere around that area. We had a parabolic move through that, which we held yesterday. So that is obviously an ADR away, pretty much 3/4 of an ADR. So there's loads of room to the upside on it. That's where I'll be looking if we break long at potential resistance. We might just hit this propulsion gap here and bounce straight out as well. But we'll see where we go. And you can see that a little clearer on this chart. So there's your propulsion gap to the downside, which broke that low. So that's where the sellers are sitting at the minute. There's a second batch came in and they resold that over and over and over again. So this whole area here is the selling from end of market yesterday. So that's your upside resistance. So we'll see where we go. We're certainly not getting anything parabolic. So just look at the what happened yesterday. Gold, obviously, I've been talking about this for weeks, it seems, waiting for this correction on gold. Yesterday, we got it. It went so fast, you basically, if you weren't in it, you didn't get in it because it went so quick. So the retracement yesterday was your entry in that. We've had it before, that type of movement, as you can see, last week, and it basically went nowhere. We came back and put in new highs. The difference between this move here and this move here is we have an M pattern reversal. We've actually broken the low from yesterday already today. So we are already 150 ADR today. Markets haven't even opened really in the UK or the US yet. So there's a potential for a continuation flush. We have seen this move before back here. This is the M pattern reversal that we looked at previous. We didn't actually break that low there. Yeah. And obviously, if you're looking on a 4-hour chart, this is potentially your higher high. And then we are going to break down from there. So we've had a similar move, but look at the magnitude of this move compared to that potential reversal, which failed. This is huge. The volatility here is absolutely immense over the last 2 weeks. But you'd expect that considering, we've been talking about it until we're blue in the face. But look at the rejection on the weekly candle. Yeah, we've undone the entire week yesterday. Keep going on about it. Climbing up the stairs, falling down the elevator shaft. When that profit take happens, you wipe out everything you've put in almost instantly. And it happens on so many currencies, so many symbols. We are basically on course to correct all the way back down to here. If you look at what we're actually potentially going to do, we've done over 30-40% of the retracement yesterday. So it's really hard to get into these moves because they just happen so fast. But there was pretty much a return to origin on that leg yesterday. Australian dollar done the same thing. Silver as well. Obviously, silver has been even worse. You look at the monthly candle on silver, it's just phenomenal. So we've undone around about a third of the silver move this month yesterday. So, you just couldn't get on it. But again, same thing, retracement back up, down. So this low here, if this goes today, that will give the market confidence that this reversal is actually in play and we are starting to unwind some of that leg. Australian, I know a load of people have been waiting for some relief on the Australian dollar, me included. We broke down and got the reversal alert. and we are pushing down. We've got to take out this low here. So it's not a given yet, the Australian dollar. But obviously, if gold goes, Australian dollar will go. So there's your previous day's low. Yesterday, what we did was come straight into that previous day's low, and they brought it straight back up again. Today, this morning in the Asian session, we've had another attempt at it. It's failed. This is a wedge. If this breaks down, this will flush. You'll be looking coming down into the weekly 225 ADR. So there's a lot of interest in the first few hours of the London session today as to whether or not gold is going to continue, stock markets are going to continue, and we're going to get this Australian dollar obviously will drop along with those. So it's going to be a pretty interesting morning. We've got news-wise this afternoon, we've got PPI for the dollar at 130 and GDP also for the Canadian dollar. So again, if these numbers, as they are forecast, if the core PPI does come out up, that's bullish US, which will drive the dollar down. It will drive the stock markets down. It will drive Aussie US down. Yeah, so we'll see if we get that positive news. If we get let's see what the standard differential is on this. 0.51. So if we get really, is it 0.51? Yeah, it is. Okay. So yeah, if we get something around a 0.7 or higher on that forecast, we're going to see a really big move in the dollar. So we'll see. I mean, that's kind of pushing it. Is that average really 0.51? I suppose it is. Yeah, we do get bigger deviations, don't we? So yeah, anything up to anything 0.5 or higher, really. So 0.7 or higher, we'll get a big move on that. We'll see what happens. But that's what you got this afternoon. There's no news this morning. We got GDP for Germany coming out at 9 o'clock. That will affect the DAX, obviously, but we'll see where we go. Let's just see what we're doing. So DAX 5-minute range is long. Crack on this manually as well today. So that risk reward's pretty crap on that long today. So I'm not going to bother with that. But I am interested in getting in short. So we'll see where we go. So that's your news. Obviously, looking at the FX markets, if we look at RSIs and ADRs, gold and silver are, we don't know what they are. They are parabolic. And obviously when you get a parabolic move, you get a parabolic correction. So this is potentially what we are seeing today. If that yesterday's low goes today, I think we've got a good chance of just a continuation on this. Where we're going to correct to on this is anybody's guess. Obviously, you're going to be looking at previous upside resistance turning back into support. So you've got the last month's high, and then you've got this peak from sort of 2.5 months ago, back in October. October, November, December. So yeah, about 3 months or so ago, you've got that peak there as well. So this is the move that started from August. But if you look at where we've come from down here, this is where the move started a year and a half ago. We had a nice leg up, bang, nice leg up, bang. October last year is when BRICS announced the it wasn't October, was it? Yeah, August is where BRICS announced that they were going to start transacting in gold within their own group. And obviously that is what started this rally, and it's gone super parabolic. So where you're going to pull back to, very, 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 very difficult to call. Assuming we are going to pull back, there are market speculators at the moment calling 6,000 on this thing. Yeah, I'm out. I'm done. I took a loss on it. Obviously, I took a loss on it there, which is what I always do. The trouble with position trading, which is inherent to the way that the market works is parabolic squeezes end with an exhaustion candle. The exhaustion move typically will be 2 to 3 times normal daily range, 300 ADR plus. Yeah, and it may happen over a day or 2 days. The problem with exhaustion moves is you can't really hold them. You could hold it. I could have sat in it and I could have taken 25% drawdown on my account and I would be back to break even now. But that's not realistic, is it? It's not viable. In case the move continues, you're just going to blow your account. You can't. So I had to get out 9% loss on it. And obviously, as soon as I got out, we had that move there, which, so if you look at where I actually got out on this and what we actually did, it was equivalent to basically an entire week's worth of movement in 3 days. I couldn't have sustained that. And obviously, neither could the market. So it came down. And this is the problem with position trading. If these parabolic moves happen at the end, you can't really sit through them. So unfortunately, I'm out. But if this correction is now going to start, we are looking, I think, coming all the way back down into testing the 2472 moving average, which is your monthly, quarterly moving averages, which are your bank reporting averages. That is very, very typical of a trend. And if we are going to move to 6,000 and we are going to want to pull back before that, obviously, this is the area that we're going to come back into, yeah, which is what we always do. We always come back into the 24, which is your monthly average price and your quarterly average prices, and then you buy up the next quarter. So it looks to me like this is starting, but we've got to confirm. We've had this before. We've tried this before, and it hadn't worked. So you're looking at that. That's a 38 retracement. If you're looking at a 38 retracement on the current leg from where we are at the moment, I haven't got the right fib on, but that's a 50% retracement back into that propulsion move. So this is a 38 retracement pretty much, isn't it? Let me just reset that fib. I hate resetting fibs. It's going to go to horrible colors. In fact, what I might do, wow, ribbon indicator, I don't want that. I might just add a new level in here. Yeah, so there's your 38 retracement. We did it. We've done it. So the equivalent pullback that we had there over a week, we did in 24 hours. Yeah. But look at the size of the move compared to the previous one, which took weeks to do, months even. This one's taken 2 weeks to do. So it's, you know, faster move, faster pullback, slower move, slower pullback. So quite possibly this is it. And now we're off again. And if that's the case, same thing's going to happen here. So today we are potentially looking at a 3-bar reversal on the Aussie US. If this closes bear today and it closes below there, we are looking at a 3-bar reversal pattern, which is obviously an exhaustion pattern at the start of a pullback. If we close below that wick there, this will sell off faster, basically. So we're looking at coming back down into weekly and monthly highs potentially. And again, you're looking at, depending on how you're measuring it, you're looking at sort of here, back down to a 50. That's a 38 there. So there's still more room on it. I need 175 ADR. My average on this Aussie US is 175 ADR at the moment. So that's my average to get out with a break even on it. That's probably what I will do, to be honest, just to protect the capital, basically, because I just don't know what's going to go on with gold. Gold is still absolutely an anomaly. It could do absolutely anything. So loads of stuff obviously is correcting. It's all going to do the same thing. So everything in the markets is all interlinked. As soon as gold does something, all the Australian pairs are going to do the same thing. New Zealand pairs are all going to do the same thing. Yeah, they're all interlinked. They all do the same thing, basically. So it's a case of just waiting to see today, I think, what happens. But silver and gold both, there you go. So silver is now back down. Looks like we've got 45 minutes left on this candle, but looks like we're going to close below this yesterday's low. Gold is trying. So watch this close. If that low goes, yeah, obviously that's the previous day's low. We couldn't close through it yesterday. We've tried today to close through it. We couldn't. So if we close through the previous day's low and we close through that low there, we will flush. You've got a weekly support coming up, which will be your next kind of stop. And it wouldn't surprise me if the market does just pause out here on a Friday. But, you know, Trump's going to say something probably today. So anything can happen. We could be back up at $6,000 today for all I know. It's a mystery. Gold is a mystery. So 4-hour RSIs all reset. We had loads of massive extensions on the 4-hour RSIs. Obviously, we were up at stupid levels on these that never been seen before. The 95s and the 5s, you just don't get there on 4-hour RSIs. They're, you know, it's just not, doesn't happen. Yeah, I said it the other day. I've been trading nearly 20 years, never seen it. So, you know, this is unprecedented stuff, isn't it? You just don't get to that sort of level. Every now and again, you'll get one. It's just so unbelievably rare. That one there looks really deep. Can't quite see it. It's behind my head. Yeah, this RSI extension here looks pretty deep. It's nearly 8. Yeah, we're getting to 5s. We just don't get to 5s. Yeah, 95 plus sub 5 just doesn't happen. So, you know, we've had 2 instances there. You had a lovely pullback on that. You got another instance there, lovely big pullback. Obviously, you get these massive extensions above. We get these lovely pullbacks. Exactly what's happened. So, you know, these levels are just phenomenal. But you know, this is what the RSI measures: relative strength. After relative strength comes exhaustion. You can't hold it. So, especially at that level. If you want to take a trade, if you want to take a trade setup that has got pretty much 100% strike rate, trade the 90-10 RSI on the 4-hour chart. Go back and backtest this with the Position Trader EA or any EA that trades RSI. 90-10 RSI has pretty much got 100% strike rate on every symbol you'll ever look at. Yeah, if you start scaling in at 90, you won't be in more than 3 or 4 trades before you're out with a profit. So those are the ones you get in big because you know they're not going to hold. They can't hold because the market can't sustain it. Yeah, there's only a certain amount of selling and buying that can actually happen before you can't sell and buy anymore because you put yourself in a situation where you're just going to be risk averse. You can't do it. So they dry up, they get exhaustion, and then they collapse. Exactly what we're seeing. But what happens after the collapse and how big the collapse is the unknown. It's a 38, it's a 50, it's a 61.8, it's an A-shaped recovery. One of those 4 things is going to happen. No idea which. So that is your next quandary. Where do you get out if you are in short? Because you need to be aware that this could just be a pullback continuation. So watch those fib levels. They are very accurate. Yeah. So the market will always use a 38, a 50 or a 61.8 because you are taking a percentage of the move as profit before taking your second leg. So that percentage typically tends to be somewhere around about 40 to 70%. Typical move. So see what happens. But yeah, massive corrections going on at the moment. So watching this eagerly, this is on my chart over here. I've got gold up permanently over here because it's just fun to watch it. I just you watch these 5-minute candles coming in. That collapsed yesterday. I was on this yesterday. This was an ORB yesterday. So if you look at the market open at 14.30, that was the market open yesterday. Yeah, I was on that. Sure. Yeah, but look where I got out. Because you don't hold, you know, these moves. So that was TP1. That was ADR. Yeah. So, you know, how often do we get ADR TP? It's every few weeks we'll get an ADR TP hit. Yeah. Went 3 times ADR yesterday. There's no way you're holding that. Well, I wasn't anyway. But yeah, if you did hold it, well done. But yeah, I didn't hold that. But it's the same with all of them yesterday. You couldn't help make money yesterday. There's your NASDAQ ORB. That was your ADR. So NASDAQ ORB yesterday was partial ADR target, didn't stop. And then it pulled back for 10 minutes and then poof, collapsed down another 50% of ADR. So, what's going to happen today? Who knows? We are long at the moment. Partials up there. There you go. Partials perfect today, look. So that's your most recent upside resistance. That is obviously your propulsion gap. So we are now coming into propulsion. So that might be where we meet that resistance, but partials there. In fact, what I might do is just stick a break even on that, just because if we do hit propulsion, I just don't want to risk it today. Anyway, there we go. So loads of excitement this week. It's all gone quiet on Greenland. No idea what's happening there, but we will see. Morning, everybody else. Peter, Johan, gold finally pulled back. Yep. Save template so you don't have to keep messing with it. Also makes sense. Market save template so you don't have to keep messing with it. What? Also makes sense. Market corrects as it's the end of the month. Profit taking. Yeah. So yeah, I mean, obviously cycles. We're only in. We're not in a quarter at the moment though. So normally you get bigger profit taking quarterly. But yeah, I mean, banks and institutions, traders specifically, work on monthly and quarterly targets. Yeah, you get paid monthly and quarterly commissions, quite often biannually as well. Biannually commissions as well. So yeah, if you've got targets to hit, yeah, and you need to stick a ton in the bank because you need a new Ferrari or it needs a service, perfect timing. So yeah, quite possibly. I know people in banks and I know they do that. It's one of those things. It's the same as anything in sales, yeah? But when you're in banking, you work on commission. When you're in sales, you work on commission. You have targets to hit monthly and quarterly, yeah? You need to look good. There's awards, there's prizes, there's all sorts of stuff going on in sales and in banking. And, if you're really greedy and there's a Ferrari up for grabs and you've got to hit a target, push the button. Why not? $250,000 extra out of it. Trump said last night, he will say the name for Powell replacement. Yep. So that's coming today. So, God, that rant about Powell. My God, the bloke's off his head. Somebody take him out, for God's sake. Destroying the planet. So, yeah, Trump said basically he's going to, too late, Powell, or whatever he calls him. There was a big post on it yesterday on Truth Social. But yeah, we'll see. See whether it's legal first. Going to announce the head of the Fed next week. Oh, next week, not today. Next week. It's not happening today. Basically, he said, this is how stupid he is. Surely there's economists sitting around this bloke going, No. Literally, everything comes out your mouth. No, it's wrong. It's totally wrong. You're just lying, basically, aren't you? So it's like we should have the lowest interest rates on the planet. No, have you seen your inflation figures, mate? Idiot. He's just an idiot. He doesn't understand how shit works, basically, does he? Anyway, but he doesn't care. He gives a monkeys. One of the richest blokes on the planet. Give a shit. So we'll have some more Trump talk today. Obviously, that can send the markets up or down. Anything, just pointless. Technical analysis, fundamental analysis, absolutely pointless. Everything that everybody's ever learned in their trading career over whatever lifetime of trading you've had so far, out the window. None of it makes any sense. The only thing that you need to know is this thing here. Yeah, that's the only thing you need to be aware of. Yeah. That's the only way you're going to make money now. There isn't an indicator on the planet, an EA on the planet, a fundamental analysis on the planet, or anything on this planet that you can put on a chart that is going to help you any way, shape, or form right now. But if this is paid attention to, you'll be fine. That's all you got to do. Stick money on and use a positive R and make sure you get a strike rate which works with that R ratio. That's it. There's nothing else you can do. Doesn't matter what indicator you get. This thing's telling you to go short now, and it's a beautiful M pattern reversal. Historically, this is a fantastic short. Trump. Doesn't make any difference, is it? The bloke is just A loony. Anyway, morning, Dallas. By the way, you, Dallas, I think you put in the members section your Discord username. I can't add you to the Discord members group because you're not in the Discord group. So you need to be in the Discord channel. So, because I can't find you to add you. So go to the Market Structure Trader website, go to Discord and join the channel because I can't add you to the members. I think it's you. I can't add you to the members basically because you don't exist. Anyway, off on a tangent. Right, so DAX is breaking long. We are very bullish this morning. So gap's situation today obviously is a tiny weeny gap up open. Only 11% of ADR. So we close these pretty much all the time. At the moment, we haven't actually closed it. So we probably will. So anyway, yeah, we'll see what happens with that. But upside resistance is obviously where we are at the moment. We have actually filled this upside gap in the post-market moves yesterday after the DAX shut. So, but this whole area here is one massive propulsion move which lasted for sort of 15 minutes. So actually probably best to look on a 15-minute time frame and you'll see it much clearer. There you go. So yeah, there's your 15-minute propulsion move yesterday, which broke these lows. So that is your next leg down. They've resold that multiple times. And this is exactly where we are now. So if these guys are still short, highly like they are, because they only had like an hour after the move went in. So they'll be in it short still. So if there is a continuation short on the cards, this is where we'll probably see them add that in. So if you are long, just be aware you are long straight into this massive batch of sellers that broke that low yesterday. However, obviously, markets are correcting now, so it might be that we start to see some pullbacks. It's a lot quieter today than it was yesterday so far. So let's just have a look at what the US markets are doing this morning in Globex. So we're selling off a little bit in Globex, not massively. Probably come back down and test the lows. But I mean, you look at this on the grand scheme of things. We're not far off of an ADR already. Are we? This is Globex. We're almost at ADR in Globex. We've done 75% of the daily range already. We have got a gap down scenario as well. Could go anywhere. Oil as well. The other thing, oil prices gone up. It's just the mass. It just seems like a commodity rally, doesn't it? It's just like, well, we know it's a commodity rally, but it's like nobody wants to hold any currency at the moment. Let's stick it all in something else, anything else, any tangible asset you can touch, we'll have it. Not interested in anything you can't touch. Nothing digital. But yeah, so oil, we had that beautiful rally for the last week. Still going. Nice pullback correction. Again, it's going to do the same as everything else. Where it's going to come back to, we don't know. So you've got a monthly level there. You've got a weekly level there. We've already used that weekly level as support. So we might find we start to pull a head and shoulders out of that, or it's just going to be a market structure pullback continuation. Talk of war, obviously, oil prices go up. There's a hell of a lot of talk of all sorts of stuff at the minute, isn't there? But yeah, world's a very fractious place at the moment. So oil's not a bad buy. Like I kept saying, I sound like a broken record because it's been the same thing literally all year. But $50 to $55 a barrel is not sustainable for oil producing countries and companies. When you start selling below $50, you start losing money. So when we got down to the $55 barrel mark, that's where I said, this is where you want to be looking to buy it. It's gone. So you want to be looking at this propulsion area here. I wouldn't be surprised if we form a sort of early to mid-year range, somewhere between $55 to $75 a barrel. Unless it kicks off. Obviously, if it kicks off, then you're going to get a Ukraine spike. Iran, obviously, is next on the list. There's a load of ships heading there. If that kicks off over the weekend, we'll be up here within the next couple of months, probably within the next month. The way things are going at the moment, we could be up there next week, couldn't we? It's just nuts. Anyway, so yeah, we'll see where we go. Interesting times at the minute. Can you have a look at pound New Zealand? Can you have a look at pound? If there's anything you want to look at, let me know. I'm not doing anything specific this morning, just sort of ambling along on the DAX really this morning. There you go. So we are starting to hit a brick wall here. We've got higher highs going in, but we've certainly got a pause candle there, and we're looking like an outside bar rejection at the minute. So I'm going to just, I think I'm just going to take that this morning. Stick it in the bank. I don't trust longs on stock indices at the minute. Pan New Zealand. I was too greedy yesterday and didn't reduce the drawdown after that push. I added new aggressive positions this morning, but the price action is not very bullish. So you're pulling back into this area that we identified previously, which we bounced out of. So you're long. Break even is 2.3. No, you're short. Not very bullish. Break even is at 2.3 down here. So you're short. Yeah. Hey. You're long. You can't have a break even at 2.3. Yes, sorry, no, blind. 2.3. Okay. Yeah, so you're basically coming back out of this previous resistance there. This is our support. That was our higher low that we put in. We retested and bounced. So 175 ADR on gold. Silver. 200% on gold. So we're coming down. So New Zealand dollar is going to weaken with the Australian dollar. The Australian dollar is going to weaken with gold because it's a commodity pair, same as the New Zealand dollar. So you're going to see weakness in Australian dollar and New Zealand dollar if the commodity rally sells off, which means that is going up. Obviously, weakness in the New Zealand dollar means strength in the pound New Zealand. You've got a nice divergence going in there, which is bullish at support. So it looks like a good buy personally to me. This is just a lower low, but with divergence, which is bullish. So you've got this big propulsion move here, which obviously they've sold off 2 or 3 times. You should get back up into that propulsion gap, but then it's a case of, are we going to continue down? So all I can tell you is at the moment, if the commodity rally goes to 6,000 on gold, yeah, that's going down. If we are pulling back 225 on gold is moving very fast at the moment. Look how fast that's just updated. We've gone 200 to 2, we've done a quarter of an ADR literally in a minute. We'll be seeing that. So it looks good to me. But your average is in that propulsion move. So again, if you look at a fib on that level, on that sort of move that we had here, not really where you take it from, that is a 38 retracement. Yeah, so we didn't get a 38 retracement on that move there. Yeah, so there's an argument for a pullback into there or there. The move has now extended. So your 38 is in propulsion. Your 50 is beyond it. You've got that sort of area of previous resistance turn support there, which is roughly a 50% retracement. So usually you'll find fib ratios line up with previous support resistance, which is why fib ratios work. Everything is done in trading is mathematical. We are trading numbers against numbers. Therefore, there are mathematical equations which drive price. That's why Fibonacci works well in trading. Yeah, and you'll always find fibs will line up with support resistance because these are previous mathematical equations, which are now new mathematical equations. That's all it is, maths, basically trading, isn't it? So, yeah, I don't think you've got a problem there. However, it's really going to come down to gold at the moment. So we're 225 ADR now. Barring a miracle, well, shouldn't talk about miracles with gold, should we? Because it's just does whatever the hell it likes at the minute. But that's your yesterday's low and the previous low. If we're going to close strong in the next 20 minutes, that is the break we've been looking for. So you are selling straight into support. So I'd hold that pound New Zealand. Well, I mean, you haven't got a choice, but yeah, hold it in a minute. Lovely rejection this morning, though. If you look on the hourly chart, yeah, there's absolutely no reason to believe this isn't going to go. There's your reversal alert, which you've had this morning in the last 2 hours. Look at the downside wick rejection, yeah. So this is your previous support zone. We know they're buying that, yeah. Tried to buy it there, we failed. We came straight back down into weekly lows, bought it. We bought the same level again. We've bought the same level again. And look at this morning. Wicks to the downside, wicks to the downside, wicks to the downside, wicks to the downside, wicks to the downside. Every single sell order is just getting bought up by whoever is sitting as an iceberg in this level here. Yeah, so it looks really good for longs. But like I said, this is technical analysis. If they decide, yeah, let's take gold to 6,000, that's coming down, yeah, because New Zealand is a commodity pair. Nothing's going to hold up against it. Aussie and New Zealand and the Canadian dollar are the commodity pairs, yeah. Mineral exports are their thing. It's just going to go, yeah. So, and this is why Aussie, New Zealand, yeah. So if you look at, you can tell how the markets work with commodities. If you look at the Australian dollar, massive push to the upside against the CAD. It's not too bad against the Swiss. We've had safe haven runs going in because of it. But you see how big all these moves have been. And you look at something like Aussie, New Zealand. Aussie, New Zealand's done that. Yeah, because it's a commodity pair against a commodity pair. When you get strength against strength, you get range. Same as the Swiss franc and the yen. Yeah. When you get a safe haven run and strength in safe havens, you get no movement on this because you're getting strength against strength, which makes range. Euro pound goes sideways all the time because basically we're the same thing. The euro and the pound. It's Europe. It's all interlinked. If you could cross gold with silver, it'd be a flat line. But yeah, so we're pulling back at the moment. I mean, it's exhausted, isn't it? I mean, we've done 225% of ADR. We only do this 2% of the year, obviously today being one of them. So yeah, I mean, we are exhausted, but you know, we've seen exhaustion on this before. It doesn't make any difference, does it? So we'll see where we go. It's the last trading day of the month today. So you might find there's much more correction on this, but just stick those fibs on and look at where potentially we're going. So this 38 retracement, if it fails, you're looking at a 50, which is that propulsion gap. Your 61.8 retracement is that propulsion gap there. 61.8 on there, shouldn't I, really? It's wrong level, isn't it? 61.8. Right. So there's your 61.8 retracement. It's actually above that propulsion gap. That's your, if this is going to be market structure long and we're going for 6,000, you're hitting the danger zone now, somewhere in there. Who knows? New Zealand dollar CAD. So that's the same as the Aussie CAD, basically. We're doing the same thing, pretty much. So we're holding at the moment at previous resistance. Yeah, so we pulled back, bought that, rebought it. We're rebuying it at the moment. Again, very difficult pair at the moment because you're trading commodity against a commodity. That is the bigger of the two. The advantage you've got here is Canadian oil exports. If the oil price keeps going up, that is going to make the Canadian dollar stronger, which will bring it down to here. The downside is the Canadian dollar is dragged by the US dollar. Oh, God knows what's happening with that. So it could go absolutely anywhere, couldn't it? So that is your 61.8 retracement back down into previous monthly highs. You've got a 50% retracement at propulsion. Uh, 61.8 propulsion. So I think it's a really ugly head and shoulders pattern forming here. I mean, that's kind of what I'd be looking at. Maybe for the rest of this week, early into next week. I'm actually for the rest of this week, basically, is just pushing up a little bit more, then potentially next week correcting. But don't forget, we've got the CAD news this afternoon. So there's a good chance that we're forecast bullish on the CAD. Obviously, if we get the bullish move, then you're going to get some strength, which means New Zealand dollar CAD's going to come down. So your average differential on this is 0.13. That's because we only get 0.1s and 0.2s on it. So you're probably looking at 0.3 on that, and you'll really see that Canadian dollar rally. So you'll be down here if we get positive news on the CAD. I presume you're short from that divergence there somewhere. Maybe even from back here. Means you're probably averaged in somewhere around there. It's 1 bar pullbacks. We've had a lot of these recently. I can't trade these. I hate 1 bar pullbacks. So that was outside bar, followed by a nice big wick rejection there. So this is a 3 bar reversal continuation. Wouldn't want to take it much up into there. So if you're looking to trade this, you've not really got a lot of distance up to resistance there. So 1R, not even that. It's going, look. So you can't really get much of a trade out of that risk reward up into resistance. But obviously, if you want to go for the next resistance up, we're looking 1 to 3, which is all right. Nice little long. I'm out though, so. Pound US dollar. So obviously the dollar at the minute, if you look at the dollar index upside down, which is the euro US dollar, we've had 2 weeks of strength. Strength in the dollar, basically. So it's weakness in the dollar. So yeah, I mean, it's very difficult to see how the market can look positively on the dollar at the moment. Everything that Trump is doing is making America worse. Doesn't matter how many times he says what he says, it's total rubbish. We know it's total rubbish because we've seen him say how much I've pumped the stock markets after collapsing them by twice as much. You know, it's like only ever one thing comes out and it's got to be positive. Everything negative is ignored. The negatives at the moment are far superior to the positives. Yeah. China, Russia, India, Brazil have basically sanctioned gold off, and now the dollar is no longer going to be the thing that we trade gold in. Yeah. So if the way that it works, if for those that you don't know with commodities markets and everything that's traded in gold, in dollars, which is 80% of all global transactions is every time me in the UK here wants to buy something from India, I have to convert my money into dollars. The dollar gets a fee for that. And then I have to convert that dollar back into India, or they do. The dollar gets a fee for that. So 80% of the world's transactions happen in the US dollar. Every time a transaction happens, the dollar gets a little bit of a cut, right? That's not happening anymore. Goodbye. So the thing that's been propping your economy up for pretty much since World War II has just been removed because you introduced tariffs. He doesn't understand for some reason, and for some reason nobody around him is telling him this, that you came into power, put tariffs on everybody, so basically you drove the entire world away from your currency. What do you think that's going to do to your business, Mr. Trump? You thought you were a businessman, obviously not getting the economics part of it. So this is why we're seeing this rally in gold, obviously, because we don't need to do the transactions in, and don't forget, India, China and Russia, quadrillion times bigger than the US. When you actually put those three together in a block and then compare it to the size of the US is tiny, right? So this massive behemoth has just come along and gone, hello, Mr. Mouse, we don't want you anymore. No, don't worry about it. I've got a bigger military. That's basically what we're up against at the minute. So right now, for the euro US dollar, I can't see anything but that, because how it gets there, obviously, is the thing that you're interested in. I've no idea. But long term, there's nothing that's going to resurrect the dollar. Look at the US dollar Swiss, which is the safe haven sort of measurement. We've never been down here before. We're going back here to 2020. So this is COVID, obviously. But, let's go back further than that. Last time we were down there was the financial crash of 2010. So I reckon we've got at least down to 68 on US dollar Swiss. Don't forget also, if anything goes wrong in the world, what do we buy? The Swiss franc, safe haven currency. No interest rates, totally flat, totally independent, totally secure. Everything goes wrong. We pull all our money out of risky assets, stocks, dollar, and everything else, and we put it in the Swiss franc. So when the dollar is collapsing, where do we want to put our money? Where's that going? So it's just one of those things. You just don't want to be long the dollar at the minute. Yes, it's going to go long for days, weeks, maybe even a month, but it'll be a pullback on a continuation, because there's nothing, unless somebody kicks him out and says, really sorry, we had this lunatic in charge of the company, he's gone now. Do you want to repair relationships? Probably a bit too late. But unless that happens, it's not going anywhere but down, is it? None of it. Which means if you've got any dollar crosses, you want to be looking to buy this on pullbacks, buy the dips, buy the RSI extensions to the downside. Those are the ones that are going to work the fastest for you. But it's going to correct. So you can still short it. Just be aware, if you're shorting it, you're probably against the trend. If ever you're in doubt at the moment, just look at your daily, monthly moving averages. They're going to give you a clue as to what you should be doing. You're going to get corrective parts, obviously. You're going to get months and weeks where, we're going to correct. But what that is, this pullback down below the 2472 here, if you look at actually what it is in the grand scheme of things, it's an accumulation. Continuation. Didn't even get a pullback, which is the norm, isn't it? World's a completely different place. January last year, you know what happened? All changed. World economics changed completely. 80 years of agreements, trade agreements, ally agreements, normality, all ripped up January last year. Bang. It's not going to stop. The only way it stops is if somebody in charge of a country isn't in charge of a country anymore. gold. I mean, you just see it. You can just see on the chart, yeah? If you put Trump's inauguration on a chart, where are we? January 25, where are we? 26, aren't we? Yeah. Somewhere back here, isn't it? God, it's a long time ago, isn't it? God, we had that long. Yeah. Do. Everything's going swimmingly. Oh, shit. Pick a chart, any chart. Whoops. Pound. Whoops. It's going to be the same everywhere. Oh, the Australian dollar was weak at that point. That was the some trade agreements, wasn't it? Was that when that was the announcement of trade agreements? You'll see a spike, I'd imagine, in gold there as well. Yeah. Commodities. Yeah. Anyway, who knows? Who knows where anything's going? Morning, Blue Trader. Sideways for most of the pairs that I usually trade, like Pontevedra. I'm under the rain cloud. Nothing's going sideways at the moment. What are you in that's going sideways? Sideways isn't a thing anymore. Hopefully it becomes a thing again. I'm just trying to see what else that's interesting in a minute. Yeah, Euro odd as well. There's another long that I've got on at the moment. Roughly 150. So that's my average at the minute on that. So hopefully that will get there today. We need some weakness in that Australian dollar. Again, I'm really just hoping that we get that continued weakness on gold, because it's going to help everything out. Stalling out at that 225. Look, we have not got back down below yesterday's low. Look, we can't close down below that low. This is going to be your first candle that breaks and closes below the previous day's low, which is pretty much where we opened in that propulsion move. So they keep rebuying this level. Yeah, we've got 4 minutes left on this candle right now. So let's see if in the next 4 minutes we do that. If we do, we've got a big problem, haven't we? It'd be nice to see that close below there, because basically, in banks and institutions, you have alarms going off at levels. Yeah, so they want to know when price opens and closes above certain levels. That's all they're interested in. Banks don't use charts; they use levels, price levels. Yeah, so let me know when we get above that level. Yeah, and let me know when we aren't. That's all they're interested in. I'm going to buy it from here. I'm going to sell it at 55.60. Are we above 55.60? Yep, sell it. That's what they're doing. They're just calling levels. You hear it in banks, you just call levels all the time. Yeah. We're not calling this level at the minute. Yeah. When we're below 50.98, let me know. We're not closing below it. So there won't be any signals to do anything here. They're just still above, within the area they want to be in, which is at the moment this low. Yeah, we're not closing below that level. So we'll get an alert when we get the 51.61 level go, which will be happening in roughly 5 minutes, if it happens. So we'll see. Might get a big move pop up off of this, because there's going to be all sorts of, we're not able to get beyond this levels. Okay, we'll get out of that then, because it doesn't look like we can. So they will start to profit take this leg, which they've been in obviously so far today, and we'll get a pop up there potentially. We'll see. Right, DAX, what are you doing? So DAX is still long. We've got 3 bull bars back to back now. So there is your always in long, bulls in control off those moving averages. So pullback continuations up into resistance. You've got 2 levels of resistance coming up today. What's that one there? That high. So it's a bit of an old level now. So that's your upside resistance, your closest upside resistance. We've got a little bit here as well. So this whole area, basically, this propulsion gap, as I said, is our potential resistance today. And then we're moving up into, so there's nothing there at all. So you're looking at this level here. 24.64 will be your next upside. If we get through this propulsion. So I think the partial today on the DAX was bang on that, wasn't it? So 45, so it'd been 90. Yeah, you've easily hit partials today. So if I got out early, just got scared out on that just in case that resistance held. But you've hit partial. So yeah, there we go. Right, that's about all I've got for you today. So we'll see where we go with gold, but let's just wait and see what this candle closes as. I'm just interested to see if we get that close below yesterday's low. If we do, what's silver up to as well? Yeah, silver's definitely going below that low. So silver is a lot stronger this morning than gold is. So we'll see where we sort of hold up. All the trend line junkies are out. So, you know, a lot of people will be looking at a resell up here, which is a 50% retracement on that leg. Next stop is 200 ADR to the downside, which is that low from, is that Monday? Oh, 26, Thursday. Yeah, so that's your low of the week there. So your candle, obviously, that's our weekly low. So if today we close down here, your daily candle is going to look like that. Your weekly candle, rather. It's a huge upside bear rejection. Yeah, so we'll see if we can take out that weekly low, which is pretty much where we are at the moment. I suspect we'll probably sort of just flip-flop around here, but who knows? Just see what's the biggest move we've had. I think it was yesterday, wasn't it? That was 500, which is 3 ADR basically, wasn't it? We've done 225 today, so there's room for the downside. And again, that is this week's low, previous week's high. So again, same thing. So this is looking, anybody that's trading weekly charts is going to be very, very, very interested in shorting this next week. So we'll see where we go. But yeah, I mean, that's the last upside rejection that we had, which made a new high. Obviously, this is way bigger from an ADR perspective, but look at what happened the next week. We sold off. Yeah, when you get big upside rejections, you get continuations most of the time. If they're making new highs, but obviously if it's sitting in a range, it's not as relevant. Yeah, so upside wicks are only relevant at the end of propulsion moves. So that's a big one. We'll see. But anyway, 5,000 is not where they reckon it's going. Some people think it's coming here. You know what I mean about round numbers, yeah? Banks and institutions, analysts, investors, they're not interested in charts. They're interested in where we're going. Where's the next stop after 5,000? 6,000. So all they do is they just call big round numbers. So that's where they think they're going. And if that's what they call, that's where they'll head it. It will just go there because that's where they say it's going. Yeah, if a bank says, I want to go to 6,000, they'll go to 6,000. They don't go to 5,915, they go to 6. That's why they work big round numbers. Holding at the moment at that high for 15 minutes on the DAX. Nice upside wicks, upside wedge. That I reckon we're going to get that level. we'll see. Right. That's really all I've got for you today. So gold, obviously, where's your hourly gone? Gold hourly close didn't make it below yesterday's low. So market's going to be a little bit disappointed with that. They've had a crack at it. They have made the previous days. So we are really stuck between a rock and a hard place. So I wouldn't be surprised if we don't see ourselves back up in here at some point today. We may just flip-flop around. But last day of the month today, so we'll see where we go. I'm back this afternoon for member stream at 2 o'clock. We'll do a little bit more analysis on what's going on with gold. And some people wanted to look at some aggressive drawdown control opportunities from yesterday's move. So we'll probably do a little bit of that. I haven't got a lot of time this afternoon again, unfortunately. I've got to go out. So we're only going to do an hour session this afternoon. But we'll have a look at everything. We'll trade the open on New York and see if we get some decent moves out of New York. Just bear in mind, we've got news at 1:30, an hour before market open for those PPI numbers. So if we see ADRs put in off the back of those PPI numbers, which I don't think we will, but we might do, then just be aware that the open might be quiet. However, last day of the month, it could go either way. So we could have an explosive one. We've had explosive ones for the last few days, so why not? So anyway, we'll see what happens. But I'll be back this afternoon at 2 o'clock if you're members. So hopefully we'll see you in the members stream. If not, I'm back on Monday. So have a good day and good luck if you're getting in gold.
Click, clack, charts attack, candlesticks, they spark the track. Lead move silent, market crack, profit stack, no turning back. Opening range, that's the game. Breakout hits, never the same. Algorithms play, but he rewires the frame. Banks whisper his name. Flipping forex, indices flex, numbers dance. What's coming next? Green lights flash, P&L stretch. Risk managed, he never sweats. West fact buzz and traders peep. Lessons deep, no time to sleep. Market's a beast, league got the leash. Feast at the feast, his game's elite. Market structures is domain. Leads the king, they know his name. Breakout sharp, he fuels the flame. Trading charts is not a game. Pip by pip, he stacking high. Mean reversion, banks comply. Leads the reason markets run. Leads the reason markets run. Candles lit, wicks on fire, spread so tight the stakes get higher. Institutional flow, he's the supplier. Positions held till charts retire. Data feeds, news he reads. Fibonacci maps the seeds. Supply demand is mine exceeds. Trades ignite like lightning speed. Stop loss tight, take profit wide. Least precision, unmatched drive. Liquidity pools, banks coincide. Retail's blind, leads the guide. Charts unfold, the stories told. Entry bold, accounts in gold. Trade by trade, the wins are sold.